Most industrial investors will make the wrong decision in 2026. Not because the market surprised them, because they guessed. Sell, hold, refinance. Same question, very different consequences. If you own industrial real estate in Burlington, Halton, or the West GTA, this decision will either quietly build your net worth or quietly drain it. Let's make sure you land on the right side. I'm Susan, that commercial realtor. I deal in industrial and office real estate across Burlington, Halton, and the West GTA, helping clients who prefer strategy over guesswork and facts over enthusiasm. This channel exists to explain how commercial real estate works, which is often less exciting and far more expensive than people expect. Industrial real estate used to reward patience by default. Buy something, wait, watch values rise. That chapter quietly closed. Today, value is splitting fast between buildings that function and buildings that need explaining. Interest rates are stabilizing, tenants are more demanding. Industry 4.0 is rewriting operational requirements, and Budget 2025 changed the math on modernization. This is not a timing market, this is a strategy market. So the real question is not where the market is going. The real question is what your building should do next. Selling in 2026 makes sense when your asset has already delivered its upside. Here's what that looks like locally. First, the building works. High power, efficient loading, modern HVAC, clean flow, clear heights, north of 20 feet. These buildings trade well because buyers trust them. Second, the tenant profile reduces stress. Strong covenant, term remaining, predictable income. Lower risks equal better pricing. The market still respects certainty. Third, you're sitting on appreciation. Owners who bought between 2015 and 2022 often forget how much value they're still holding. Normalization did not erase gains, it filtered them. Fourth, modernization feels like work you no longer want. Power upgrades, ventilation, dock reconfiguration. If reinvestment is not part of your plan, selling before functional gaps widen is often the cleanest exit. Fifth, capital wants a new assignment. Debt optimization, diversification, estate planning. Waiting is not always patience. Sometimes it's hesitation. Selling is not quitting. Selling is execution. Holding becomes powerful when value is still compounding quietly in the background. Under market rent is your first clue. A tenant paying $12 net in a $15 market represents future NOI without lifting a hammer. Appreciation likes this setup. Upgrade-ready buildings deserve attention. Budget 2025 made modernization far more compelling. Immediate expensing changed underwriting overnight. Power, ventilation, automation support, dock efficiency, functionality now converts directly into value. Favorable debt matters. Older financing with attractive terms often outperforms new structures. Cheap money still counts. Zoning and land scarcity do the heavy lifting. Burlington and Hamilton are not adding industrial land. Good sites age well, bad layouts do not. Holding is not passive, holding is deliberate. Refinancing is far more strategic than most investors admit. Modernization needs funding. Power upgrades alone can reposition a building. HVAC, lighting, docks, and flow finish the story. Equity stays invested. Refinancing releases capital without triggering a taxable sale. Old strategy, still effective. Better buildings attract better tenants support better rents. Valuations tend to follow. Refinancing prepares future exits. Upgrade in 2026, stabilize in 27, exit into strength in 28. Debt renewals are coming. Many owners face loan events between 2026 and 28. Proactive refinancing keeps control in your hands. Refinancing is not delay, it's leverage. The framework I use with investors has no headlines, no vibes, just structure. 1, does the building function today? If yes, sell or hold. If no, refinance or reposition before value erodes. 2, do you want to invest in modernization? Yes, supports holding or refinancing. No, supports selling. 3, is the tenant profile strengthening or weakening? Strength supports patience. Weakness demands action. 4, what does your life strategy require? Wealth building? Retirement, portfolio simplification, development. 5, how much value can realistically be unlocked in the next 36 months? Meaningful upside supports continued investment. Limited upside suggests it may be time to sell the asset. Investors who use structure tend to sleep better, and that's not an accident. If you own industrial or office property in Burlington, Halton, or the West GTA and are done guessing, subscribe, like, and follow. Weekly breakdowns happen on leases, valuations, power, financing, and why it'll be fine is not a strategy. Timing gets the headlines. Strategy keeps the asset working. You don't win in 2026 by predicting the market. You win by understanding what you own and what it can realistically do next. There's nothing wrong with waiting. Waiting without a plan is where it gets expensive. Built for business, backed by data, negotiating with bite. I'm Susan, that commercial realtor. Now that you know, what are you going to do about it?